Hello friends, this is Raj Sastry from Raj Option Trading. Today is August 30, 2021. I will talk about stock and option purchasing ideas for the week of August 30. So with that, we'll use TTM trade or a TTM trend indicator from John Carter. So with that, let's get started. So what is TTM Squeeze? You might ask. So TTM Squeeze has got multiple things going on. So it looks at a chart. In this case, I like to look at the 1 day chart, a 3 day chart, 1 week chart or a weekly chart and a monthly chart. It kind of gets you a good idea on what's going on. So as you see here CLF, by looking at 1 day chart, you look like it's in a very big bullish market. But as you go through and look at 1 month chart, you know it's got a lot of room to run. It was as high as 91. So that's why I like to look at multiple time frames, so that way you can get a good idea where the stock is headed to. And in the TTM squeeze, we got multiple things. First one on the lower side is a TTM squeeze. So whenever you see a red dot here, that tells you right now there's a tight compression of volatility and you got to watch out for next green dot. If there is a next green dot, that's your signal to really go long or short. So to decide whether to go long or buy or go short or to sell, you got to look at a longer term C wave. When there is a red dot, if the longer term C wave is above zero, the line here is zero line, and the bar on top, if it is above zero, then you go long or buy, call or buy stock itself. And you can also look at the shorter term A wave. If the shorter term A wave is above zero, then it's bullish. If it's below zero, it's bearish. But according to John Carter, you can ignore short term wave for most part and trade in the direction of the longer term C wave. So with that, same thought process as you go towards the 3 day, 1 week, and 1 month chart. As you can see, your first red dot indicates tight compression of volatility. At this time, Bollinger Band is inside Curtain channel, so energy has to get released. So that's where it's a tight trading range. It indicates there is a tight compression of volatility, and you got to watch out and trade in the direction of longer term C wave. And first green dot after a series of red dot, look here, we got series of red dots here, and if you wait for a first green dot, when that happens, you got to understand, look for the longer term A wave here. If the A wave is above zero, then it's positive. Longer term C wave, if it is above zero, then it is positive. The best squeezes are the ones that fire in the direction of C wave. So in this case here, it's the illustration. C wave is above zero, you could go long. So if you want to buy call option, make sure IV percentile is below 50 and RSI is below 55. So that way you got more room to run. You're not risking too much. And pay attention to how stock is responding to or responded to squeeze in the past. As an example, if you take CLF here, look here, you got squeeze forming, first green dot, it went up, squeeze forming, first green dot, stock went up. So if you look at the past history of the stock and how it responds to the squeeze, that's a good indicator how it might respond in the future. So with that, let's jump in here, look at a few stocks here. So we got a bunch of stocks here. One thing I'll tell outset, this is sorted by volume, a weekly volume, 1 day volume on Friday. So the stock at the top has got very high volume, the NNA. Many of you may not have heard this stock, but very high volume. As you scan through here, we got some stocks which are penny stocks. It may not be suitable for most of you. You can ignore them. But if you are a penny stock trader, you could look at them. It's up to you. But these have got high volume, so that's why I listed them out here. So with that, let's look at the first one here. I've highlighted few stocks for you. Just before you go through the chart here, the way it's organized is we got the ticker, the name, the price, market cap, sales and sales growth. Very important to have positive sales growth. As an example, Freeport McMoran has got a good sales growth here. Same story with this DraftKings, Chevron, so on and so forth. If you stick with these fundamentally good companies, you don't need to risk too much. It's a little bit conservative play. But if you go with companies with negative sales growth, for example, GoEV or a Marine Software, you are really high risk, high reward type person. You got to watch out a little bit. Don't put all your money in one basket in those scenarios. And we got also the sales growth, like we talked about, the gross margin, net margin. Important to have good gross margin, net margin. Look for rule of 40, meaning gross margin plus quarter over quarter sales growth greater than 40. Those tells you companies are really fundamentally stable. As an example, Freeport McMoran, DraftKings, and so on and so forth. And then you got institutional ownership, tells you how much institutions own this company. The higher the better. Then we got short ratio here. Higher short ratio, more potential for a short squeeze and stock to go up on any good news. As an example here, GoEV, 11% short ratio. You can think about any short squeeze here, stock will go up on a good news. And same story with VICI and Inovio, same story. So you got to watch out for these names with a high short ratio. And then you got here price to sales or a valuation. High valuation means companies really really valued high. You got to be careful. But low valuation probably is okay, but not very low. Then you got IV percentile. If you're an option trader, watch out for IV percentile. A high IV percentile means you could sell options and make money. At the same time, when the IV percentile is low, you could still buy call options and you could make money that way. But don't buy call options when the IV percentile is high. You will lose money in most cases. And then you got RSI here. When the RSI is below 55, you could buy the stock, a good entry point. But if the RSI is above 55, watch out. As an example here, some of them got high RSI here. Probably ACST here, $42 stock, 42 cents stock. RSI is 69 here. And then we got here next three columns, very important. These are John Carter's TTM trade indicators. So we got 1 day squeeze, a 3-day squeeze, 1 week squeeze, and a monthly squeeze. A 1 day squeeze will last for a couple of days, good for swing trading. A 3-day squeeze will last for multiplication of 3 days, like 3 days, 6 days, and so on and so forth. Little bit longer term trend here. You don't need to worry too much. You could buy. And then you got a monthly squeeze, lasts for a couple of months, as you can see here. So then you got earnings, just to see when the earnings are. That will tell you it's a good idea. Sometimes around the earnings you got to be careful because there is too much volatility. And then you got the performance here, 1 month all the way to 5-year performance. Tells you, indicates you how the stock is performing in the past and how it might perform in the future. So if you're a fundamental person, look at the stocks performing well in a 1 year, 5-year time frame, and even maybe 6 months time frame. That tells you company is doing well and it might do well in the future also. So with that, let's look at few names here. First is MRIN Software. As you can see, a $6 stock. There is a squeeze in the 3-day chart. And if you look at the short ratio here, 2%, not much at this point. IV percentile is 26. You could go to MRIN Software here, MRIN. All right. So if you look at MRIN Software, let's go to a chart here. First start with the smaller chart. So as you look through here, stock is at $6.92. Stock had done nothing, had a huge short squeeze here, went all the way to 27. Now he's trying to see where to go. As you see here, people are buying the stock. That's why on the balance volume is going up. A lot of people are accumulating at this time. And as you see here, RSI is trying to pick up. DMI indicates it's positive, meaning the blue line is above red line, and blue line wants to go up and red line wants to go down. That's a good sign here. Volatility has picked up in the past a little bit, but IV percentile is still high, as you can see at 89.5 at this time. And then we got here check-in money flow indicates smart money is flowing into the stock. So with that, I guess you could look at a bigger chart here. But IV percentile is high. I might have said it's low in the past, but this is not a good candidate to buy options. So with that, let's go into Marin software here. As you see here, we got here 1-day chart. A squeeze is forming. When the squeeze is forming here, tight compression, Bollinger Band is within the Kelton channel at this time. A wave, shorter term A wave is above zero. As you can see, small yellow bar here, that's above zero line here. And as you see here, the C wave is above zero. It's 1.87 here. And as you see here, the zero line is right here, so it's above zero. So it indicates Marin software is a go. You can buy the stock in the stock outright, or you could buy call option if you want to. But for call options, indicate it's very high IV percentile or implied volatility percentile. I would rather buy stock outright. It's a $6.92 stock. And as you scan through here, so we got red dots and a green dot forming here. And at that time, the longer term C wave is below zero. One thing to watch out, sometimes even the longer term C wave is below zero, look at the direction or the trend. It's trending up. That means you're okay to buy the stock because it's trending up. So as you look through here, as it turns dark blue, it will try to trend up, then it will basically go up. So it's trending in the right direction. So that's why you could buy some Marin software in ahead of the game and go from there. And now we'll go into one or two more stocks here. We got here, if you're an option, if you're a ETF type person, we got EFA here, showing some sign here in a 1 week chart. You could go long. And we got Freeport. Freeport is a $36 stock, and it's also showing it in a squeeze in the 3-day chart. And as you scan through here, we got a couple of these penny stocks here. You could look at them. ASTI seems to be on the higher side, 2-cent stock here. And as you go through here, let's look at one with the probably high short ratio. Let's look at GEVO, GEVO. So if you look at GEVO here, oh, it's actually GEVO. GEVO here, as you can see here, stock is doing pretty okay, trading range for a while here, and volume is pretty good. It's pretty steady at this time. RSI is trying to pick up. That's a good sign. Stock is getting momentum here. DMI perspective, it's bullish. The blue line is above red line. Distance is becoming bigger. And check-in money flow is pretty stable here. Implied vol is not much, it's 50. So with that, let's go into a TTM squeeze chart here. As you see here, we got, let's see here. So as you see here, there is nothing much going on. I don't see a squeeze here. Let's go back here and see where is the squeeze. It's a GEVO squeeze in a weekly chart. So let's go to weekly chart here. Okay, there is a squeeze that's just formed in between here, just one dot. But as you scan through here, charts like this, you got to be a little careful. Even though you don't see much here, look at the trending of this. Trending is going towards higher, so you could get ahead of the curve and buy some GEVO. Given it has got a high short ratio of 10%, you could buy some GEVO stock. It's $6.58. I would not do options on this one because it's a low dollar stock, and stock moves quite a bit. You could buy some stock outright instead of options. So we'll go back here, look at DraftKings here, $60 stock. Looks like we got a squeeze in the weekly chart. Let's go to DraftKings. There you go. So DraftKings, as you can see here, nice looking chart. Right now it's bullish, and on the balance volume is up. That's good. More people are buying. RSI indicates a little higher this time, so you got to be careful when the RSI is high. Typically see what happens when RSI is high, stock comes down. So with this one here, you got to be a little careful. Probably you would not want to buy at this time. Wait for a little pullback and then you can buy. As you see here right now, it is bullish with the blue line above red line. Blue line wants to come down a little bit, or stable, and check in money flow indicating money is flowing into the stock. So if you want to buy a little bit, you can buy, but because RSI is 68, it's good to wait a little bit. So with that, let's look at one or two more. As you scan through here, we got Dollar Tree here, DLTR. As you see here, it's got a squeeze in a one-day chart. You could buy some Dollar Tree. Stock has fallen down after the earnings. And let's look at VC properties here. VC properties has got a little bit higher short ratio here. Let's look at VC. So VC properties, as you can see here, nice looking chart here. Stock is trying to go up. Volume is also nice. On the balance volume wants to go up. RSI is 53, still has room to run. And look here, DMI. DMI is showing there's a bullish there is a bullish crossover. The blue line wants to cross over red line. That's a good bullish crossover here. And we got implied wall going down. That's good. And we got check-in money flow actually going up. Smart money is flowing into the stock. So this is one which has got legs. You could do some trading on this one here. And also IV percentile is low, 0. That tells you if you buy options, you're not going to lose much money. So with that, let's go into VC properties here. As you see here, we got a squeeze in the one-day chart. When that happened, shorter term A wave is above 0, longer term C wave is also above 0. Coast is clear. And as you scan through, we got a dot in a weekly chart here. When that happened, shorter term A wave is below 0, but longer term C wave is above 0. That's again a good sign here. I would love to have light blue line here, but it's a little bit dark blue, a little bit bearish, but I think it should be okay. And we got here longer term, coast is clear, there is no red dot, still the C wave is above 0. So with that, you could buy some VC properties outright, $30 stock. Let's go back to VC properties, VICI. So as you see here, $30 stock, it went as high as $33. So probably you don't expect a big pop because 52-week high is 33 itself. So you could do one thing, you could buy stock outright here, or you could buy some option too. If you want to buy option, stock being at 30, you could buy 25-35 spread here, a $10 wide spread. So something like this. There you go. So you're paying $5.30 here, and remaining $4.70 is your profit potential. Almost double your money type proposition here. There you go. If you do that, you are going to pay $5.30 to make $4.70, and max loss is $5.30. If the stock is about $30.30, which is just below current stock price, you'll still make money. A little bit conservative play. You want stock to go about $30.30, and I think this is a good play. You could go with this, or you could buy option outright. If you want to buy option outright, you could go delta 70 here. Right now there is no delta 70. You could go delta 95. This is too much money to pay for this stock here. You can pay $6.10 here, and every penny, every dollar stock goes up, this option will go up by 95 cents. It's a good proposition. You could do something like this also. So next we look at a couple more here. And before I go to the next one, as you see here, there is this stock also gives you, let's see, is there a dividend here? Yeah, there's a dividend. Typically, you got to be careful when you're buying dividend stocks, especially when you're buying options on dividend stocks, because sometimes they don't tend to move too much. So that's why, when it's paying dividend, you could buy some options, but you are better off buying the stock stock itself. Now let's look at one or two more here. As you scan through here, probably let's look at let's go to the next chart here. We got CFG CrowdSt even up here, $282, still going strong. You could buy some call option for CrowdSt here, or you could buy a spread. As you go through here, Aurora Cannabis short ratio is high, 19%. There is a squeeze in the weekly chart. You could look at ACB and see if it's worth buying. All right, ACB. So as you see here from a chart perspective, looks like stock wants to go up. On the balance volume is pretty steady. People are buying this company. From a DMI perspective, it's a borderline right now. Right now it's bullish borderline. Check-in money flow indicates smart money is flowing into the stock, and IV percentile is very low. You could even buy options at this time. And now if you go to TTM chart here, we got here squeeze forming. Where is it? On a monthly chart, and when this is happening, the shorter term A wave is above zero. It's above the zero line here, but the longer term C wave is trying to think where to go. As you see here, you have to really squint here. Probably it's right now it's a dark blue here, and right now it's not showing too much indication. But as we looked at the previous chart, there is a smart money is flowing into the stock. You can get ahead, but even by looking at the curve here. Look at the curve here. It's trying to curve up. It might go up here. Same story, trying to curve up. This is a little bit slow here. It might also curve up slowly. That's why right now you're buying ahead of the game here, even though there is no clear indication on the long-term C wave. So sometimes it's okay to do something like this when you see some good trends from a chart perspective. As an example, the reason we are going long on this one is really, if you look at this chart here, RSI is going strong, smart money is flowing into the stock. That's why you're going with this stock idea. So if you want to go with ACB here, Aurora Cannabis, you could buy stock outright here, $7 stock. Probably that's the best thing to do here. High short ratio. But if you want to buy option, you could go Delta 70 here, right here, Delta 74. It's 109 days out, $1.85. You could just confirm and send. So with that, let's look at one or two more here. So we got a couple more here. We got VXRT. Again, this one has got a high short ratio also. And let's look at VXRT and go from there. VXRT is one of the favorite meme stocks, as you might be knowing. Look here, on the balance volume is pretty steady here. People are buying the stock. RSI is pretty stable, 56. Right now from a DMI perspective, it's bullish. The blue line is above red line, and check-in money flow telling you money is flowing into the stock. So coast is clear. Now let's look at a TTM squeeze chart here. From a TTM squeeze perspective, we got a red dot in a one-day chart. When that happened, we got longer term C wave above zero. Shorter term A wave is barely above zero. And there's a squeeze forming in a 3-day chart here. When that happened, longer term C wave is above zero. Coast is clear. And we got here weekly chart. We got a dot forming here. Tight compression of volatility. Bollinger Band is within current channel. When that happened, longer term C wave is trying to go up, as you can see here. Right now it's not above zero, but you can see the pattern here. It can go above zero anytime. And we also have a dot in the longer term weekly chart here. When that happened, the shorter term A wave is barely above zero, 0.72, which is above zero, and longer term C wave is trending up. So here also you could, even though in the longer term it's below zero, you could go long here because you see the trend is trending up. So with that, you could go to VXRT here, go to option chain, $9 stock. You could buy the stock outright. There is a high short ratio. It can cause a short squeeze. But if you want to buy options, you could go Delta 70, which is Delta 73, pay $3.15, buy it outright. Every dollar stock moves, this option will go up by 73 cents. You could also buy a you could also buy spread if you want to. $9 stock, you could go 7.5 and maybe 12.5 if you want to buy a $5 spread. There you go. So you're paying $1.32 for this spread here. You're making, the remaining portion of $5. You're making profit. It's as you can see, you're paying 132 to make 368. It's much more than doubling your money. If the stock stays above 882, which is below current stock price, you'll be profitable. This is a good trade here. You could take this trade and go forward. With these type of spreads, as you can see here, your profit is always capped. That's why for low dollar stocks, you could be better off buying the Delta 70 call outright by paying $3.50. So that could be a better way. So with that, as you can see here, you got some good names here, starting with you know ARKK. It's our Cathy Wood's ARK Innovation. You could look at that too. It's got a squeeze in the monthly chart here. So, the ETF itself is down 24% year to date. With that, thank you very much. Happy investing and trading. Please subscribe.